The modern financial system, the one that powers economies across the world, didn't appear overnight. It was built brick by brick, development by development, over centuries. It began in medieval Italy, where growing trade with the Arab world brought not only goods, but also new ideas, especially in accounting and finance. As commerce expanded, merchants needed credit, and so the first banks were born. These early institutions gave traders the lifeblood they needed, funding for their ventures. But it wasn't just trade that drove financial innovation, it was also war. City-states like Venice and Florence were constantly fighting, and war demanded money. Fast. To pay for soldiers and weapons, governments began selling bonds, IOUs that promised interest in his return for a loan. Thus, the bond market was born, offering a way to fund wars while allowing citizens to invest. Next came 17th century Holland, where a powerful idea emerged, the joint stock company. Businesses could now raise large sums by selling shares of ownership. These shares could be traded, giving birth to the stock market. The idea took off and quickly spread worldwide. By the 18th century, another player entered the system, insurance companies. Using financial data, they built huge investment portfolios to manage risk and protect lives and property, turning risk itself into a tradable concept. Then, in the 20th century, governments stepped in. They regulated, supported, and sometimes even funded key areas of the financial system, especially in housing. Starting in the 1920s, the real estate market expanded rapidly, driven by government incentives and a vision of a property-owning democracy. Home ownership became not just a dream, but a central part of economic policy. Today, banks, bond markets, stock exchanges, insurers, and real estate, all interconnected, form the complex system we call modern finance. Please like, subscribe, share.